Hello traders, Gary Wagner here, just after 12 noon in Honolulu, 6 o'clock in New York. It is Wednesday, 21st day of April 2021, and this is the daily report for gold and silver. Strong and respectable upside moves in both gold and silver have affected our trades in that we sent out a trade alert to raise our stop. We talked about one strategy yesterday. If gold, for example, trails to 1800 and backs off. On today's show, we're going to talk about the other strategy, which is if gold effectively closes above 1800. That changes everything. We'll talk about that during our show, which begins now. Traders, very solid gains in both gold and silver today. Currently, we have the most active June contract of gold, up $15.90. It is currently fixed at $1,794.30. It hit a high today of $1,798 before backing off ever so slightly. There are a couple of things that we do want to take note of as we look at the price board. The first thing is that we absolutely are seeing a cross between the 21-day exponential moving average and the 50-day simple moving average in gold. This is a standard candlestick chart. The second thing that is noteworthy is when we look at the current Heikin Ashi daily chart in gold, we saw some weakness that we reported yesterday because we had wicks on both sides. We had a very, very small candle. Realize that the Heikin Ashi is always taking the open and basing it upon the midpoint of the prior candle. That changed when the market had the solid gain today. You can see we've got a nice sized body. We have no lower wick. We have an upper wick. And that's what we want to see as the market is in a defined uptrend. I think that we could not only challenge 1800, but close above that. And that is the primary reason we went and raised our stops today. On today's show, I will talk about an alternative strategy if the market solidly breaks through and closes above 1800, as opposed to what we talked about yesterday, which would be a failure after hitting 1800 and then beginning to correct. No question, but both gold and silver had solid moves breaking above the interim short-term resistance level. In the case of gold, the area that we were looking at really was 1784. That is based on a Fibonacci retracement. That Fibonacci retracement is the 38.2% retracement. And of course, traders, that's based on a shorter data set than we have been using to reflect what's happened this year, because at the high this year began at 1962. Market traded to the first of two bottoms at approximately 1670, 1674. That double bottom that we spoke about yesterday resulted in a solid level of support. We had spurts. The first spurt, as we talked about, took it to about 1740. Market traded sideways. And then we had this spurt that is most recent, which occurred starting last week on Thursday, following through this week. And now we have gold ready to challenge 1800 and 1802, which is the 100-day moving average. Another noteworthy technical feature currently is that we have had a cross between, as I said, the 21-day exponential moving average as well as the 50-day simple. The next target is obviously a close above 1800 and a close above the 100-day moving average, which is currently fixed at 1802. Should that occur, our next upside target is going to be 1818. That would be a mild one. It is a 50% retracement with major resistance or potential move to about 1852, because we have a harmonics here. Not only does 1852 represent the 61.8% retracement of the sell-off that occurred, but it also corresponds very closely because the 200-day moving average is at 1858.10. You can see how close they are. And that tells me that that is a key and critical level, because at that price point, you have multiple technical indicators, both pointing to roughly the same price point. And that would be around $1,850. So if we get a solid close above 1800 and the 100-day moving average, our next real target is going to be about 1850. We have some real interim or minor resistance between those two price points, 1818 being one of them. But I think that a solid close above 1800 coupled with the fundamentals that are moving this market, which is a huge uptick in certain parts of the world in COVID-19 cases, which many economists believe will slow down the worldwide economic regrowth that people have been really counting on. We can see that in U.S. equities. We can see it in the safe haven assets. Maintain your current long position in gold. Move your stop up, as we spoke about in the trade alert, which in the case of gold, the June contract, move that to $1,760. In the case of spot or Forex, you want to move that to $1,759. Silver had a solid move, now well above $26. And after factoring in today's gain of over 3%, 80 cents, currently we have the May contract at $26.40. Silver had a strong dynamic jump to the upside when it traded above not only the 100-day moving average, you can see it opened just above that, but it solidly closed above the 50-day moving average as well as the 50% retracement at 26.12. Those were key areas that we spoke about to look for some sort of a pullback, and we had an action plan if it did. It did not. That is why we moved our stops up. And in the case of silver futures, we moved our stop to $26.10. Spot, we moved to, I believe, 25.87. But let's focus on futures here because there are a couple of things that are really strong. First of all, we've talked about this before. We're still in solid bullish alignment. We have the 50-day above the 100-day, which is above the 200-day moving average. That's how you want to see these moving averages when you've got bullish momentum. Secondly, we had a solid close above really any kind of real resistance that could come in the market. This is recent data. You can see all of this top, all of this noise, and silver closing solidly above that. We'll go ahead and compress this chart because, as you know, our next target, now that we have gone through effectively our first target, is going to be $27.12. That is based on the 38.2% Fibonacci retracement level that occurs right here. Now, I don't see that as a hard move. If, in fact, we can get a continuation and a solid close above $27, our next target would become $28.35. You can see we've got a series of tops here, so we've got good historical data that could be a price point if, in fact, we break through there. Because when you look at $27, there's a lot of noise that comes in this area, but really no solid top. Nothing like the identification of the top that comes in right here at $28.35. Maintain your current long position. Absolutely move your stop up to where we suggested in silver. SLV is the same thing. We moved up our SLV to 23.97, and we are long well below that. Traders, this has been a solid performance day for both gold and silver. This is Pete Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.